Well, with us is Andreas Utermann, Global CIO of RCM. Now, Andreas, before the break, you were telling me that actually you're very mindful of the risk that's out there on the markets. Talk me through some of the strategy changes that you've had over the last couple of months, either in terms of sector groups or in terms of assets.
The key change really occurred at the back end of the summer, towards the end part of August, early September, where we sensed that the risk-off phase in the market was going to come to an end, and we were going to come back to a risk-on phase in anticipation of quantitative easing and really in recognition of the fact that most of the company results all over the world and most of the GDP numbers and so on had actually been surprising on the upside throughout the summer, and that hadn't been recognized by the market. So that was the key asset allocation change we made.
Andreas, how concerned are you that actually Ben Bernanke is putting this QE2 on the market? And we're hearing that the ECB president is looking still and actually getting out of liquidity, extra liquidity on the markets.
I think that's quite right. I think we've had 2.5 years worth, 2.5 years where the ECB policies and the central bank policies of the Fed were very similar. Now we're seeing a significant divergence. That's going to have an impact on currencies. It's going to have an impact on a number of asset classes. But I think essentially the quantitative easing policies by the Fed are quite sinister in the sense that really they've diverged, they've gone away from economic fundamentals, which was really to help the markets come to a fair pricing of capital and the price of capital, and moving away from that, trying to influence the benchmark cost of capital in such a way as to get asset prices to rise. Now, as that happens, that's pretty much the same as saying you're pre-announcing bubbles. And we're starting to see that. We're starting to see that in the commodity space. We're starting to see that at the long end of the bond markets. And that clearly is something which is not good.
But bubbles in emerging markets, or is there a danger that actually this extra QE2 is also, putting some bubbles in Europe and in the US?
Well, we're not there yet. I mean, clearly the fundamentals of the equity market are still fairly well priced. There's no real issue there. And even in emerging markets, they haven't really done that well. But I mean, the risk is there. And really the biggest problem with quantitative easing, the longer it goes, the more capital allocation decisions are going to be done on the wrong premises. So if you think about, for example, people who have to buy annuities. If they buy annuities now at very depressed long-term yields, they're not going to get very much money for their savings, and that's really a bad thing.
Andreas, we only have 20 seconds left. Give me your best industry group that you're looking to invest at the moment.
Technology, that's going to continue to transform the productivity potential of the global economy, and we still feel very strongly and positively about that sector.
Andreas, thank you so much. Andreas Utermann there.